Hi, Warriors. How's everyone doing? Let's capture some pips this week. Who's with me? Hello, Shahab, Mike. How are you, Mike? Glad you enjoy coming in here, a regular. AJ, Brand. Okay. Biden and McCarthy to meet again. Yeah. Everyone doing okay? Jays? Yeah, okay, everyone. Yeah, got a nice crowd today. So let's talk about what's happening. And for me, the most important chart in the universe is not the euro. Although I think you have to sell rips in the dollar. I think as long as 102 holds, that there's more left to the upside. It'll be just like the stock rally was hated, so will bear market rally in the dollar, in my view. But this is still the most important chart. I don't know if it has to do with the debt ceiling or not, but I just want you to take a look at the weekly on TLT, which did break down. Unless it's going to turn out to be a false breakdown, you always have to be ready for that. But longs are now rationalizing their position because of weak economic numbers. So we're getting weak economic numbers, right? And also we have a record net short position in treasuries. I mean, huge amount of short positions. So I believe price is truth. And I've been in trades where prices told me you're wrong, and then I'll start looking for other reasons to rationalize my position, which is, well, I do think we're bottoming. And, I think there's a chance of making new lows here. And why do you think I think that? Where's the chat? This is 20-year. Why do you think I think confirmed low? Exactly, Michael. So, we're entering an era now where we used to think, well, bonds and yields went up because of economic strength and humming along economy. We've entered a new era. So how can rates rise in a weak economic backdrop? That's my final quiz question today. It's not technical. How could it happen? Paul Shorkey, you win. That's right. Too much supply, a lot of money to roll over debt. They used to make movies about rollovers and, so I've seen this crowding out. So all of those things they used to write about 20 years ago that could happen in the bond market wasn't going to happen in a bull market. It was going to happen in a bear market. So I just think this is important. I don't think that the market, even though we're in the process of a blow off, maybe we are going to 4,300 in the S&Ps, and the housing stocks have been hot. Well, almost every stock except, copper stocks, manufacturing has been weak. But if the bonds make new lows, what's going to happen to all the easing priced into the back end of the year? I think the market's offsides on rates. And even the 10-year, which may not make a new high, but I think it's going back to this triangle as long as it holds 360. I don't think the market's prepared. If we broke out, God, I don't know. No one's looking for a breakout in new highs and yields at all. No one. I don't know anyone. Anyway, those are the two things to keep an eye on. I think that's going to be what's behind the big correction in currency and the dollar. And I know a lot of people are saying, are optimistic. An optimistic scenario for the dollar would be for it to get back to this level. That's what a lot of people are saying. I think we'll get to this level and then maybe we'll pull back to give bears hope. I think we'll penetrate this level. And just an arithmetic move from par and a half to call it 105 is and a half takes you up here, which I think this is 61.8 and this might be 78.6. So the TLT chart, I think, is the driver for that. The driver for gold to pull back to its at least its breakout 1920. Silver tried last week. I don't know. I still think 22. And now I'm going to bring in the crew. I know Ryan's back. How are you, buddy?
Hey mate, how you doing?
Good. How was your your trip following around being a groupie of the team? How was being a groupie of the team?
Messy.
Huh? Huh? You get party with those guys too
Oh yeah,
after the
yeah.
games? Oh, okay.
Little
Well,
party.
I could tell you're a little, not really rested here. Anyway, looking at the pound, I know, what I said about the dollar. You have a different view, and that's fine. Are you getting long things like cable and euro, or are you just, getting your sea legs back after your trip?
Yeah, I'm not doing anything like fresh at the moment, bar managing what I've got on.
Yeah.
The pound's going to be very big this week because we've got the CPI numbers on on Wednesday,
Okay.
and that's going to be really big for the quid and what's expected from the Bank of England. A lot of the market thinking a pause is coming, or maybe one more hike. And those numbers are probably going to cement it, and it's likely to be a big mover one way or another.
Okay. And still sitting with this.
Yeah, I'm still sitting short in that. Not looking too good at the moment, is it?
Um, yeah, if we get a dollar pullback, and I'm wrong about yields, it should start working if the 10-year gets back under that. What was that level? It was 360 right here. We're at
Yeah,
368, but this level right here, if we negate it, then the yen will probably come off. And
yeah. I've got a
anyway.
slightly different theory for your higher yields.
Okay.
You were saying supply was one of them. What about the premium people are going to want if the US is heading towards a default?
Oh yeah, that's a bond crash. We'll see new lows in a hurry. So you're right. I mean, that could permanently, um, you know, put U.S. Treasuries out of favor, even if it happens for a short period of time. That's another great reason. They should, maybe the gilts. I don't know. Do you follow the gilts? Do they have a similar pattern to what U.S. long rates have, where they look
Yeah, well,
vulnerable?
there's said I read some catching up. I read that perhaps the pound is a bit of a carry trade at the moment because actual rates in the UK are higher in some than the US,
Okay.
and so the market's parking some money up in UK assets.
All right.
Hence why the pound has been a bit resilient of
Okay.
late. So much for things disappearing into a fiery hole in the UK. Everyone wants to put their money here at the moment.
Yeah, I did read though that what's happening with the gilt market could be shaping up for what happened, a year and a half ago when we had that big problem that day and the BOE was in there.
Yeah,
What they're talking about having a 2.0, like another version of that setting up in the gilt market. So
hmm.
when you talk about sovereign debt, I followed guys that talked about sovereign debt crises that didn't just happen in one country. That in fact it was Martin Armstrong, and I don't know if you guys know of him, but he's got this model based on pi, but he's made a lot of good forecasts, and he said there would be a sovereign debt crisis that would start in Europe, move to Asia, and then hit us. Um, I think that's what we're in the middle of right now. Could call it a confidence crisis or inflation scare. Either way, I think that we have a problem with national debt everywhere. China's got a debt problem. What country doesn't have a debt problem right now?
Exactly.
They'll just
So
issue more, monetize it. That's what they know how to do
yeah,
everywhere.
that's what they will do everywhere. They'll try, but where's the money going to flow in fiat? Do you think, Stel, in a situation like that?
Good question. Speaking about the, you're talking about bonds, treasuries before.
Yeah,
Joseph Wang said something very interesting. He said that if there is a default, they're going to prioritize treasury. So they're going to prioritize paying treasury coupons and repayments and all that, and then find solutions and other ways to not pay elsewhere. So I think a debt default in the US is pretty much impossible. I mean, obviously nothing is 0%, but it's pretty much impossible, and they'll find creative ways to get around the problem until it gets solved, which means until they raise the debt limit again. So my theory is that even if we see that things go down to the wire, there's another government shutdown, they're going to prioritize debt payments and interest payments. And for that reason, I think the market is going to realize, hey, we might not see rates this high again, at least not in the foreseeable future. So we might see inflows into bonds perversely, into bonds, trying to lock in whatever yield we can get, because after that, I think yields go lower. So
yeah, it's interesting.
It's interesting
that you bring up Joseph. We have him here this week.
Oh, but perfect! I really, really like him. Excellent.
Yeah, so
he can talk about that for sure.
Yeah, and I remember the last time I talked to him, I was asking about this bond chart because I was thinking about, it's in Edwards and McGee, this you should be looking to get long because it's a reversal formation, but it's failing. And that's more important than the formation. It's more important than the net shorts. It's more important than weak manufacturing. Price is truth. And I know it because I've rationalized things before. That's how I know right now people are probably rationalizing their long positions in the bonds. But, we could spike and make new lows regardless of remedial measures they take or their, priorities of what they're going to pay. I still think it's good. No matter what they do, I think it's a crack in confidence. So we'll see. So, I think more people are thinking it might happen now, that there might be a default, but now it won't matter. They're writing about it. If you're telling me what Joseph's right, they're writing about it. So even if there is a default, there's nothing to worry about because the Treasury has it all handled. Right?
Yeah.
I don't. Who runs the Treasury?
Who knows, right? Who knows?
All right, then. I mean, who do you really trust? Who runs the Treasury to make great calls?
I don't trust any of them. Yeah.
All right. Anyway, of course. Anyway, so K-Man, how are you today?
Hey, hi Dale, hi everybody.
So still range trading, pretty much.
Yes, sir. Until further notice, with a small dollar positive bias in the short term, and then we'll see how it goes with that and other ceilings, and see if they get painted. On the side, I'm still pretty bearish. Rand, I'm trading that relatively actively. I was long dollar China, but then I left it PBOC, not very clear. But we're still above 7, so that's still positive.
It's holding that breakout.
Yeah,
that measures pretty high, doesn't it? 720, 730.
Yeah, there's something going on around 712, 14 as well. But we could see it higher, but it's probably going to depend more on geopolitics than really rates right now, but it could also depend on US debt, of course, because whatever they may say, they've got an absolute pile of it. So it may affect Chinese yuan as well. And and I'm pretty positive dollar yen for as long as we hold 137 half 3/4 for now. And on your yields or your rates, if you go to the 10-year note future, that broken down last week. It was trading a range. It's the futures. It was
these are yields. So yeah, the yields broke
second
out
one,
on
broken through 114, and it's still looking pretty perky. If you look at the 10-year yield is now pushing up against the 370. That's looking pretty well. The 2-year yield is above 423.25. That's another one to keep an eye on for dollars, I reckon. And the rest, but I'm not bearish pounds, but CPI can change a lot, of course. But I still think the pound is could be a small outlier here. Still behaving pretty well. It's a bit like the pound to the euro right now. What the Kiwi is to the Aussie, doing a lot better than the Aussie.
Yeah, I've been looking at this for a while and was kind of hoping we'd get one more washout here. In euro pound. Because it won't confirm this time. I'd like to see a turn in EG for even if it's a bear market rally before I make the pound my preferred short. I want to see this turn. Right now, Euro's still the preferred short when this is heading down. But if we get some divergence here, then cable, if we bottom here, cable becomes the preferred.
Yeah, but there's two things to note about this chart, I would say. The first of all is that it's very stable right now, very stable. And also, but it's stable at relatively low levels compared to the past months. And that also means for me that the sterling right now has lost its status of being the weakest one in Europe, and I think it's pretty interesting. I don't know actually how the market would react on a. Of course, if it really crashes away the CPI, sterling is going to get hit at first. But if it's like a stable move lower, we've seen other currencies react a bit bizarrely to CPIs coming out these days. I wouldn't write sterling off just as yet.
Yeah, I'd like to see where, say, the dollar pulls as close to 102 as possible, maybe 102.20 or so, and see where the other currencies are. I wish Grega was here because this looks like a triangle. We've had a decline for a long time, and in Elliott, they look for this could be a wave 4 triangle.
Yeah, I was just going. It looks like
which implies one more thrust down that's terminal. So that once we break down, it's not really the beginning of a big move. It could be the completion of a move coming in. So that's I surprised myself. I didn't think I had that much to say today. So
but that's if it's like an equal 5, that's going to take us down into the 84th on Eurostar.
83.5 is 83 to 84 is a big support zone. I think we're getting there.
That wouldn't be that would probably be a decent area to start to think about other stuff.
Oh yeah.
Or the other way around.
It's getting ready to put in a death cross in a few weeks.
Yeah, as Steve said, though, very correctly, when it's trading sideways, these crosses, death cross, and the other one, which is what's called the other one?
The
golden cross.
We talked about how we didn't like them.
Yeah, but it's still an event. So
yeah. Anyway, well, it just looks like consolidation. Steve, you have Elliott now. Could this be a 4, and we get one more shot down to complete?
Listen, I'm not an Elliottician, right? I do
pretend.
I do take Elliott waves into account though, and I do like to count the simple structures. I can tell you two things. First of all, this looks like a bearish consolidation, this triangle. A. B, in general, the euro pound has been in a very, very choppy longer term consolidation. So Personally, I'd prefer trading other stuff, right? Short term, yes, this can be a nice short opportunity getting out of this triangle, but in general, I would, I would advise people to stay out of things that trade this way and find markets that are more trending, because these can give cleaner opportunities and give you a faster return for your buck, because you end up trading in markets like this.
Are there any markets or sectors or groups?
You might have to stay for a long period of time until you see some results.
What trends do you see anywhere?
Listen, in general, as I've been saying multiple times,
I am listening.
The past 3 weeks have been very choppy, right? The past 3 weeks have been very choppy. But markets like gold and silver, I think they're trending. Yes.
Yeah, they're trending.
I think the dollar is also trending, despite the counter trend move that we're seeing unfolding as we speak.
Okay.
So I do think that trading the dollar to the short side once this is over is probably going to be a nice opportunity. Now, what kind of vehicle you want to use to trade that, which kind of FX pair or whatever, it's a different type of conversation. But in general, I do think that the dollar has found a new trend to the downside, and this is just a counter trend move. So I'm looking forward to taking advantage of the continuation of the trend.
Well, do you think you have time to drink at least one milkshake before you put shorts on?
I'm not a big proponent of the milkshake theory. Which
anyway, I thought maybe you'd like to, you and Jason could go have a malt or a milkshake during this bear market rally before you do that.
No, I think I was looking forward to this bear market rally for several weeks now, and I'm very happy we're seeing it unfold. Because I thought it was a bad idea trying to chase the dollar to the downside. But on the other hand, I think it's a good idea trying to find, to start looking for areas to be short the dollar again in, now, I don't know, it might take a few days, it might take a couple of weeks. I'm going to keep monitoring the price action and decide, but I definitely want to be short the dollar once this is over.
Wouldn't it be nice to, be able to buy like the pound at, 114, euro?
Although to be honest, the pound would not be my first
euro would be
choice.
How about at like a 99? Blake's long-term buy the century in the euro back near parity.
That would be great, but I'm not sure we're going to see a pullback to parity. I think I think that's not necessarily the case.
Okay. All right. I still do, Blake. Do you? Or do you think that's pie in the sky, bro? How you doing?
Listen.
I am, man.
No,
listen carefully.
Listen to me. Listen to me, and don't listen to anybody else.
Yes.
Listen.
No, he's just saying pay attention.
I know
to what I'm saying.
I know.
Because
it's funny.
Very valuable.
As Americans, when somebody says that, the first thing I'm gonna do is I'm gonna stick my finger in my ear. So when you say listen, I'm gonna be like, F you.
Hey, you'll still have 1 year.
Just kidding. Joking. All
right, here's the main man.
But no. Jokes aside, it's funny. Every time you say listen, I get a chuckle. Let's talk a little bit about the dollar index. And by the way, good morning, everybody. Hope everybody's had a great weekend. Hope everybody here had a great weekend. It's been like a pretty quiet start to the week already, but what we'll notice is futures are actually hitting highs right now, and they're at the highs of their session. And so, with that, usually brings in, some dollar weakness. And so we're seeing it right now. But, to go back to your question, Dale, as far as where we're going to be able to buy dollars or sell dollars and maybe buy the euro, I think the 200-day moving average is probably a fairly reasonable target, which is the upper end of this range, which means that the euro is probably not going to get much below 105, 106. I mean,
yeah,
that's kind of what I think. I think the euro is going to
step at it. I get carried away.
But the thing is I think a lot of us are wanting to buy a euro pullback, and so you know, the question is how far are we going to pull back? You know, if everybody's trying to step in front of that, I do believe this is logical and this is where we can get long, but we also have to see what's accompanying it too. It's easy to say that right now, but you know, when you're faced with that decision, when the euro, like, let's just say you're sitting here like this, and let's fast forward a month from now, and you know, we're breaking through 105 and we're, you know, testing the 200-day moving average, yet you have the S&Ps breaking below 3,800. You know, you throw that into the mix, and am I going to be the first one running out to buy the euro in that situation? Probably not. So, you know, I think you gotta, you know, see what's happening at that moment in time.
Yeah.
But anyway,
agree.
Yeah.
You
So,
know,
so anyway,
I think I'm Nostradamus sometimes. I'm delusional.
Nostradamus. Nostradamus.
Really not.
well, so I want to ask you guys, how do you feel about this week? What's the most important thing that you're looking for this week, aside from the debt ceiling debate? I mean, you know, obviously there's going to be headlines flying around throughout the course of this week, but let's start with Ryan. What's the thing you're looking for towards most this week? I know we only have a few minutes before Dale's guest gets here, so
as mentioned earlier, it's going to be the UK CPI PPI numbers on Wednesday.
Yeah. So what are you looking for as far as the CPI you know, is being released? What data are you, or what headline are you looking for that's going to be the market movers? Because it is going to be, is it Tuesday night, Wednesday morning, or is it Monday night, Tuesday morning? I'm trying to think myself.
It's Wednesday our time.
Wednesday your time. So it is going to be, oh, there it is. Okay. I couldn't remember if it was tonight for me or tomorrow night, but it is tomorrow night. Okay. So CPI, what are you going to be looking for here? You know, we're coming off that 10% handle. And you know, the market's looking for 8.3% here. What do you think?
I would think it's not going to come down as much as that. I think it could still remain sticky, and if it does, that's going to force the pound higher, because if the market's going to be looking for further rate hikes from the Bank of England.
Okay. All right. So
the other side, you're going to see, you'll probably see the pound drop quite a chunk.
Okay. And you know, I'm gonna just tell you guys this right now. This is the UK CPI is not something that I can stay up for. It's just you know, it's right in the middle of the night for me when I'm sleeping. But those of you that are in Europe, make sure you pay attention to that headline number. Thanks, Ryan. How about you, K-Man? What are you looking towards this week? What's going to be the big thing on your radar?
I especially hope that my car starts on Wednesday early morning, because I'm leaving for a week and a half to Belgium. So that's
your car.
My main concern right now. Apart from that, I will still be looking at stuff from a distance, of course.
Of course.
There's some decent data at the end of the week for the US. I think we've got that must be the final GDP on Friday, on Thursday, but we have stuff on the PCE on Friday, right?
Right.
And then tomorrow, big PMI day to start with, and then a bit in the mix, we've got RBSZ. They have acted a bit like weather vanes over the past few meetings, so there may be something there on the Kiwi starting to move. Kiwi, which has been very resilient of late.
It has been, yeah, it's been very, very resilient. So, okay. All right. Well, thanks, K-Man. Stelios, what are you thinking? Anything on your radar? Are you looking for anything in particular?
Good question. I'm actually looking at stocks. I think if the S&P breaks above those previous highs from Friday, I think we're going to move higher. Sorry?
I have a line at 4,300. Blake,
what did you say, sorry?
At 4,300, Blake, if you put a line above, stop moving. The high that we had at 42 in December, and then the next
sorry,
one,
my internet went down. Can you hear me now?
I hear you.
We can hear you, mate.
Yeah, there it is.
Okay. Sorry. So
listen.
At 61.8.
Listen, I can hear Steve.
Yeah.
Let's-
Oh, we have data.
Just
We have data
kidding.
now. We don't. we
No,
don't.
it's Monday. It's like nothing really happening. So anyway, you're looking at the S&Ps this week.
Yeah.
If they break through those highs. All right, very good.
Break above the highs, we go to 4,300. I think that's a quick swing trade. I think.
Yeah.
Got it. Steve,
He's been
what's
right.
on your radar this week? What are you thinking?
Nothing has really changed since last week. I'm still watching the dollar rebound. I know we've stalled a little bit here, but I'm not convinced that it's over, and I'm also hoping it's not over yet. I'm definitely paying very close attention to silver, which is riding the broken channel thin line resistance as support. So that is definitely extremely important for silver, because we break through it, then we'll have to look for a deeper corrective move, probably towards 22.5, I would assume. Gold has also found support at the February high at 1959. I'm also paying attention to crude oil. Crude oil has been consolidating its recent gains. My gut feeling tells me that it's not done rebounding yet. I would expect another leg out of this might start unfolding.
Steve, we've got a guest coming on.
No, I don't. Nargis isn't here. So.
Oh, you don't see Nargis. Okay. All right. Yeah. Continue on, Steve. What else are you looking at? Crude oil?
Yeah. So crude oil, gold, silver, and the dollar index. I'm going to stress out what we've all said multiple times. S&P is testing the 4,200 area. We know how important that area is. I'm a believer that most likely this area won't hold for much longer, in which case we should be looking for another extension higher towards 43.12.
Are you a seller up there?
Depends on how the price action unfolds towards that level. In general,
understand.
You know very well that for months now, I've been very, very hesitant with the idea of shorting this market. Yeah, I think this is a stealth. This is a stealth bull market, and it's very tricky to short.
Okay, so you think it's a bull market, or we've entered a new bull market? Okay.
At least for the time being, that's what it is. But I have no problem changing my mind. But in order for me to change my mind, I need to see price action change.
Yeah. Right.
Right. And for the time being, I don't see something like that.
Okay. All right. Dale, what are you looking for this week?
I want to buy dollar weakness and sell, strength in euro. 109.40 would be great. I don't think the euro has that much in it. I'd like to see EG, make one more new low and see if it diverges, and then my preferred short then becomes cable. If I think EG is bottomed, then I'll be selling cable. I think cable, you could risk the highs here, but we could try 25.5 again. People thought they had it last week, so long the dollar on weakness, and still accumulating VIX calls and Apple puts.
So you're accumulating VIX calls. This is some really pretty key support, but it's interesting. I was going to say it's interesting. While we're below 20 on the VIX, it's a hard environment, right?
Yeah,
the hard environment to be trading right now.
Yeah.
So,
well, I'd like to see where it's at if we get to 4,300 for an ad. Maybe it'll be 14, but it doesn't seem to really be giving up the ghost with the strength that we had late last week. It still held the prior week's low.
Yeah.
So, anyway, I'm rationalizing.
All right. Sounds good. And I want to reiterate something for that I'm looking for, that in case you missed the week ahead video this week. I am selling an announcement, and if we have a debt ceiling raise, and that is announced and both sides agree, and it's going to be passed to the Senate, and everybody in the Senate says, hey, we're gonna sign off on this too, and we get some sort of agreement, I'm going to sell a rally, hopefully into 4,300. As you guys were talking about 4,300, that is 127% extension of this whole last move here. And it's also the 618 retracement of this entire big move. It's a confluence.
Could do it in a week, Blake. Could do it this week.
I hope we do get there, and I am looking to sell up there, but not until after we get some sort of a resolution. Also, at the same time, I'll be looking to buy yen as a result. One of the things I want to point out really quick, and I'm going to give a freebie to for those of you that are not in the ForexAnalytix chat room, just kind of something that we've identified. However, has Nargis gotten here yet? No. Okay. So, however, I'm going to just kind of share with you guys, this is the ForexAnalytix chat room. You can kind of see where we're at. And I want to bring up a specific chart here. This is the Euro Swiss, and that's the 618 retracement. So keep your eye on this. This is going to be really important support for the Euro Swiss. But more importantly is you got to look at the dollar Swiss, because if you want to be a buyer of or a seller of Swiss francs and maybe a buyer of dollars going into a debt ceiling announcement, which you want to be long dollars into that, selling after that, that means you probably want to be buying the dollar Swiss somewhere down here with the Euro Swiss near such key support, dollar Swiss near support here. I picked up some just a little while ago. So there's a little freebie that you get just from, if you go inside the ForexAnalytix chat room, you get a lot of conversations and us talking about what we're buying and selling. You can go directly to the trades room and see what we are buying and selling and who's doing it. And therefore,
hey, I have a question. All right, F.A.C.E is going to close here in a few minutes.
Yep.
Where is everyone going? Tell me where you go if you don't go into a chat room, guys. What do you do?
Yeah.
Hey, go into your
Dale. I'm sorry. I got to pass it over to you guys. I've got to run out in the front of my house real quick. So, I'm going to pass it over to you. But yeah, thanks everybody.
All right, Blake. Hope everything's okay. So anyway, guys, I just want to ask you. I mean, where are you going to go to keep the flow going and this kind of conversation? I hope it's as good as being part of the community at ForexAnalytix, and you just aren't left to your own devices the rest of the day. Okay, AJ goes to the morning edge. All right, that's my best call for the week is get into the ForexAnalytix chat room. I think it's a call that'll pay off. In fact, what are those calls called, Steve, that are real long-term leaps? So buy some leaps on your future as a trader by paying a premium to join ForexAnalytix. That's your best trade on the week. And, I don't make any money off it. It's just something I believe. Okay. So everyone have a great day. Remember, don't just count your pips, count your blessings. And I think we're going to have some great action this week. I want to thank the whole team. Yeah, I want to thank you, K-Man, for, really adding a lot of value to what we do here in F.A.C.E. And Ryan, it's great to have you back. And Stel and Steve, you guys are stalwarts. And Steve, I always listen when you talk. You don't even have to tell me anymore. I know it's just your style. But he's gone anyway, so I'm talking to myself. Anyway, you could join the team in I don't know, about 45, 50 minutes on the morning edge. Adios, guys.